short for their computer. Ain't nothing new, this info wait for everybody, yo. Use it to your advantage to take over your body, yo. Magic mushrooms, I had him eating them like Mario. Blockchain heavy, got it clicking with the Molly flow. That niggas gotta know.
It was founded by a Japanese guy.
Or guys, or girls, going by the name Satoshi Nakamoto in 2008. True identity still unknown.
Talking about niggas grilling, man. We out here. Lordy. Yeah. I told my Lordy to take a look inside the dark market. Upload the Bitcoin, we going car shopping. Yeah. You wanted me to check out your music page, you not popping. Knock your ass out like Bernard Hopkins. I got a computer geek white boy, you go to John Hopkins. One Bitcoin worth $8,000. Let's get it. Found the vendor off the tour browser, bought product and flipped it. He just needed to drop Addy for where they gonna ship it. It wasn't a scam, he read the forms before he made a decision. Until he ran into his man Skrilla. Yeah. Told him we can do this shit legally, no need for paraphernalia. Just keep your word, I heard here's somebody that'll kill you. I'm on a Coinbase, looking kinda familiar, like I've been here before. I see the transaction on the blockchain, you gotta spin with your boy. Shoot me the address to the wallet, and I'ma send it tomorrow. Just make me want run up in all black on the horse like Zorro. It'll be best to control your temperature, Paco. Put a nigga ass in the footy nails, there won't be nobody there to help you. Coinbase layout super easy, there's no way I can fail you. Use the VPN so the boys have no way to trail you. To move at fast pace, I had to control the hash rate. The value of the Bitcoin decreased, it was a bad day. Misogynist acts use bitches' backs as an ashtray. Skate on bitches like Cascade. I'm out. My lordy got a Bitcoin ATM in his living room. All of the cash I had in my pocket, I wanted to give it to him. With the vision I'm vicariously living through. I told my bro it's a way that we can make money even though it's different for.
Gets urgent. All right.
Not gonna get in the
What
block.
is up, y'all? It is CK. This is Drinks in Quarantine. We got a great panel today. We can start off by introducing everyone. My main job is just to make sure the conversation flows and that the drinks flow as well. I'm going to kick it off to Brand BTC, my co-host. What's up, man?
How's it going, CK? How's it going, everybody? Welcome to Drinks in Quarantine. We've got an extremely great show tonight. I cannot wait to dive into Bitcoin finance. Dude, let's introduce the panel. Let's just do it.
All right, let's go to Matthew Black. You are on my right. Why don't you introduce yourself to the audience?
Yeah, absolutely. Hey, everyone. I'm Matt. I'm from Atomic Loans. We work on Bitcoin DeFi products. Originally got into space back in 2014. It was my dad that introduced me to Bitcoin. He's a bit of a gold bug. And then now we're just building Bitcoin native DeFi. So yeah, that's me.
Okay, I'm not sure what Bitcoin native DeFi even means, but we're going to get into it on this call. Let's go to Andrew Benson. What's up, my friend? Why don't you introduce yourself?
Hey, how's it going? I'm Andrew Benson. I'm the co-founder and chief operating officer at River Financial. River Financial is a Bitcoin brokerage based in the U.S. We launched last year, and excited to be part of the panel today.
Cool. Next, Russell, introduce yourself.
Hey guys, nice to meet you all. I'm CTO and co-founder of Tantra Labs. We're a algorithmic proprietary trading desk who specializes in hedging, not only for miners, but also Bitcoin investors. So as a Bitcoin native company, we look to make people more Bitcoin rather than just more dollars.
Awesome. Thank you for coming on the show. Parker.
Thank you for having me.
Yeah, of course. Parker, welcome back to Drinks in Quarantine. I think this is like your third one. So you're a veteran. Why don't you introduce yourself?
Yeah, I'm Parker Lewis. Good to be here. Looking forward to the panel. I work at Unchained Capital. We offer Bitcoin native financial services. We offer custody solutions that are built on multi-sig, and we offer Bitcoin-backed loans and expanding an OTC desk and look to be doing a lot more in the future. So excited to be here. I also write a blog on the internet and talk all things Bitcoin all the time. So excited for this.
Yeah, your blog got a shout out from Michael Sayre. So that was pretty big praise there. You're moving mountains for Bitcoin. Thank you, Parker, for coming on. And then last but certainly not least, Jeremy Ruben, welcome on. Excited to talk Bitcoin native finance with you.
Yeah, thanks for having me. I'm Jeremy. I have Judica.org, like Bitcoin research and development organization, trying to push the envelope on Bitcoin smart contracting. I also do Bitcoin core contribution. The dog back there is Asher, and I am drinking an Aperol Spritz tonight, in case anybody wants to drink along with me.
Yeah, and on that note, yeah, what's everyone drinking? I got a Corona.
This may or may not be vodka.
Texas whiskey here.
Nice. Wait,
Guys,
Matt. Wait, sorry. Go for it.
I was just going to say,
Got some water here.
I've got a very rough situation going on. I'm still at the parents. We just bought a house, but I'm with the parents tonight. I went through the liquor cabinet of what they had, and I'm drinking gin, ice, Pepsi, maple syrup, and a little bit of lime. So it's going to be a weird night. I'm letting everyone know beforehand, because if you see me kind of slowly sipping, it's because I'm trying to like grit my teeth and get through it. So, but I'm with you guys.
I have a key question for you. The gin that you're drinking, did you replace half of it with water while you were in high school?
Can't neither confirm nor deny. And you know, my parents might be watching. Who knows? So for all they know, no. But it feels a little watery.
Nice. Not a gin guy, I can tell. But awesome, guys. Well, I'm excited for this show. We have an opening question here. A lot of times Bitcoiners talk about a magical future when we have all these different kind of soft forks and different kind of technologies on top of Bitcoin. I'm kind of curious, like, what is exciting you that's being worked on right now that's kind of, you know, held back by a future feature? Let's jump to Andrew.
Go to me last. You go to me last.
Go to you last. Okay, sorry. Well, I mean, the only person working on soft fork here is Jeremy. I guess what kind of things excite you that's enabled by maybe CTV or Taproot or something else that's being built out there? I'm sure it's a long question.
So I am working on a couple different soft forks. CTV is like the main and like first one that I'm hoping to get progress on. The way that I see it, check template verify is BIP 119. It's going to be one of the biggest changes in how people are able to use Bitcoin ever. And it's not going to be like, now we've got the EVM on Bitcoin, but it's going to solve a lot of these fundamental issues that people solve or people have to solve every day with transaction congestion, as we're seeing like in ETH right now, like their fees are just absurd and they can't get their transactions through. It's going to solve things for people who are having trouble managing self-custody. And it's going to make opening up Lightning channels like substantially easier. And so that onboarding is just going to be like tremendous. So I'm really excited for Check Template Verify. And there's other stuff that I'm working on as well, which is hopefully going to fix a lot of the transaction mempool like stuck issue that we're having, where transactions can get stuck in the mempool. I've got something I'm working on for that. And then all these things, of course, all work together, in the zeitgeist with like Taproot and any prev out. So I think that there's just going to be a lot of stuff that's exciting, and Bitcoin is, incrementally building this, mountain that is not built on cards.
Yeah, absolutely. And I guess maybe sometimes it can be frustrating, but hopefully it's the right way. Matt, let's jump to you. I know that you're working with DLCs, and there's a bit of need for Schnorr, desire for Schnorr when it comes to that department. So why don't you kind of talk about that?
Yeah, absolutely. I mean, Schnorr isn't required for DLCs just to work by themselves, but once you have Schnorr, you can enable things like transferability of DLCs over Lightning, for example, which is particularly exciting if you want to have any type of advanced options. If you want to have binary options or standard options with using DLCs. Before I get into that, I should give a quick primer of what a DLC is. It's basically a Bitcoin Oracle contract, smart contracts for Bitcoin, where a price feed can come in and people can create various contracts using that. But Schnorr is obviously very, very useful for that. I guess some of the other softworks I'm excited for is, as Jeremy mentioned, Sagash no input or any prev out, because it enables some interesting things. Obviously L2, not having long timeouts. Same thing with state chains as well, payment channel factories. So those are definitely excited, and I'm also interested to see what CTV can do. Obviously a big fan of the work you're doing, Jeremy, and obviously being able to open up a significant number of Lightning channels using that, I think is really beneficial. So, yeah.
If I could, I'd love to add on to that. I think at Tantra, a lot of what we do is we try to do our accounting in Bitcoin. And so a lot of the new implementations that we're seeing that make it easier for us to not only transact on top of Bitcoin, but then to do more scalable transactions. I think we're seeing it right now in Ethereum, right? And Jeremy talked about it. The transaction cost on Ethereum is insane because of the congestion in the network, but also you're seeing how much the internet or our community wants to do things with decentralized finance. Like there is a need and a want for it. And it's so amazing to see it be built, like Matthew said, not as this house of cards, but actually a very strong foundation where we're not only learning from mistakes, but we're taking our time. And, we have some of the greatest developers in the world working on Bitcoin right now. So I'm just excited to be a part of it and see it all, unfold before our eyes, because we really are decentralizing finance, something we talk about a lot. It's like in the very beginning when the hypertransport protocol for the internet was created, not many people understood what that meant or how it worked. But now when you go to a website, you're using the hypertransport protocol. You're typing in HTTPS. That's what's being built on Bitcoin today. That's Lightning. That is CTV. That is all of these new technologies that are going to enable people to transact on the internet without even needing to understand what Bitcoin is or what all these things are. The groundwork and the foundation is being laid right now so that we can decentralize money in general. And it's just absolutely incredible to be a part of that movement.
Awesome. Yeah. And well put. Kind of talking about like demand for decentralizing money. Parker coined a term on one of my podcasts. He said definancializing the system. I'm curious, Parker, what are you seeing like in the future of Bitcoin, and is Unchained kind of like excited for any future or new up and coming capabilities?
I'm going to duck that question just a little bit. I think that there are things that we're excited about on the horizon for sure. I think that the principal investment that we've made over the last 12 to 18 months has been around collaborative multisig. And realistically, just in the last 6 to 12 months, I think that we're starting to see the accelerated adoption of individuals that are facilitating self-custody, as well as businesses that are facilitating self-custody to start to adopt multi-sig. And
we use their multi-sig and it's incredible.
Yeah, we've got Tantra Labs on board. So, realistically, our greatest excitement is in advancing that aspect in delivering and commercializing multi-sig for a self-custody application. But there are aspects of Schnorr and Taproot that we are excited about in terms of privacy around multi-sig. But realistically, right now, people are really learning about multi-sig for the first time, and people certainly don't like to change how it is they secure Bitcoin. Bitcoin security and custody is precious, and whenever someone's being asked to change that, it goes with a lot of diligence, tinkering, and understanding how the technology actually works. And so we're getting to the point where I think the first wave of adopters and businesses that are leading in that effort are venturing down that path, and that will only continue to see more individuals and businesses follow down the path as well.
Yeah, I mean, the Michael Sayer story is amazing, and then you hear guys like Jeff Booth saying that he's on the board of several other companies that are also, having these conversations. It's just like, okay, well, where does this go? I wonder. Andrew, let's jump to you. As you asked, you're last on this question. What are your thoughts on future tech, as well as how you guys think about all of this stuff?
Totally, yeah. So we think on a very long-term horizon and timeline. So we're very excited about Taproot. Obviously, we have plans to implement that very early on once it's available. And we're very excited about TapScript and what that will allow us to do. As we know, we want to go and become a vertically integrated financial institution instead of going horizontal and supporting a bunch of different assets. We want to build as many financial services around Bitcoin that we can. And I can't speak about specifics yet, but we're having some cool conversations about what TapScript can enable us to do. So we're very excited about that.
Awesome. Well, guys, let's jump into the rules really quick. So drinks in quarantine, we have some drinking rules. Really just want to make sure that everyone is having a great time. So our usual rules are you just can't say these specific words. And if you do, you just got to drink. So you can't say drink. You can't say Bitcoin. And in this case, you can't say custody. So that's the no word. Let's see if y'all can get through it. I'm going to drink to those rules. So cheers to y'all.
Cheers.
We're playing by Brian Armstrong rules then.
What does that mean?
Can't say Bitcoin.
Word you can't say.
Can't say Bitcoin. That's a normal word. We try to challenge people.
I was on
mute.
Hear the Bitcoin universally known.
If I say Bitcoin Cash, is that the same thing?
I mean, no, absolutely.
You have to finish your drink.
I'd be very confused.
Sorry, just trying to stir up some drama.
You have to finish a different but worse drink, actually.
All
right, y'all. So I'm curious, like when I say Bitcoin native finance, I'm curious like what that means to you guys. That's our first topic, is what is Bitcoin native finance? I want to throw it back to Andrew. This time you get to be first. I know that, you guys talk about being vertically integrated. I feel like you're one of the first companies I think of when I think of Bitcoin native. So why don't you talk about Bitcoin native finance and what it means to you and River?
Sure. So for what it means to River, I think might be a little bit different than what it means to the rest of the group here. But for us, being a Bitcoin first financial institution, in the sense that our financial services that we offer are built around Bitcoin. As Bitcoin becomes a payment instrument in everyday transactions, there's going to be a lot of financial services that are needed around that. Not to mention just the financialization of BTC as well. So lending as an example, and using that for non-financial use cases, but operational use cases as well, I think is very, very interesting. And something that's kind of missing in the space right now. So we look at this as saying, to be a Bitcoin first financial institution, Bitcoin native institution, we have to have the best Bitcoin technology in the space, and we have to also have the best financial technologies in the space as well. Making everybody drink a lot right now.
You're muted, CK.
Yeah.
Oh, sorry about that. Yeah, you're gonna be really hydrated, Andrew. I can imagine. Who wants to take over? I agree. We need the best technology.
I can add a little bit more too, because I think we're very similar to River in a lot of the way that we started Tantra almost 2 years ago now, or actually it's probably more than 2 years ago. It's been fun these last few months. I forgot. So we were like in a world where everybody's looking at the US dollar and everybody prices in the US dollar, and even people that own BTC are pricing it in US dollars. Why don't we be, man, you really made it tough with not letting me say the B word. So
ETC.
yeah, so we want to be BTC denominated. We want people to be able to give us money and make BTC. Like imagine instead of, I think the biggest thing in crypto today is people don't want to give, like they don't want to sell BTC because it's like, well, it's going to be worth $1 million in 10 years. And so that's why we see all these companies that are, well, you can loan against your BTC or you can do this with your BTC. And so we were like, okay, why don't we build a company where you can loan us your BTC and we're going to use that BTC. And so I had experience with trading. And so I said, okay, well, we can use that in the futures market and we can, I'm not going to plug Tantra here, but basically the whole idea was that, okay, let's build a Bitcoin, a BTC denominated business that allows people to give us crypto and us to make more of it for them. The same way you give, a loan to your friend so they can start a business with US dollars and make more US dollars. We're doing the same thing, just with Bitcoin instead. And I think that as the ecosystem evolves, more and more companies like ours will come out. And like you see it with ICOs, right? Like ICOs are businesses that you can invest in with crypto and hopefully make more of that crypto. And I'm sure when Liquid comes out with all the ICOs, and that may or may not happen on BTC, that might be a whole nother craze. Hopefully not, and we get to keep everybody's money. But
ICOs are just typically bad investments, so I just hope they go away. But I get what you're saying, and I think that the Bitcoin, and I'll drink to saying that it will enable sovereign companies. People haven't thought about that, but imagine Google, but actually sovereign. Bitcoin kind of makes that possible. If they adopted Bitcoin, they could be sovereign. They could put their middle finger up to a lot of states and do their thing. So I think that's in our future.
I agree.
I mean, what does Bitcoin kind of enable? I mean, Bitcoin native finance is, first of all, store of value that's FU money, which is just awesome.
Yeah. Well, it's the first time in history you have an asset as your currency, which is just, it is truly a revolutionary thing if you're willing to price it that way.
Totally. Matthew, do you want to jump in? I see you nodding your head a little bit.
Yeah. I mean, I think this is an interesting question because Bitcoin native finance. I mean, Bitcoin kind of gave us the assurance of censorship resistance, open access, pseudonymity, et cetera, and and it gave us all these aspects that are really, really great about Bitcoin. Oh, okay, now I need to drink. About BTC and as this digital gold. But it's interesting that there's a different level of thought process that people put to the financial tools that are used for Bitcoin. So I think the way that we approach financial tools for Bitcoin is that the financial tools that are built for it should retain the majority of the properties that Bitcoin actually has as its core. It should be censorship resistant. You still should remain pseudo anonymous. And I think for us, kind of looking at the direction that we're headed in the space, specifically at Lightning. If you look at Lightning right now, Lightning is good for payments, it's good for games, but there's no type of financial tools that are built around it today. And I think that's a big problem because people are able to go and if people want to get access to more advanced financial tools and maybe they don't want to go through the process of KYCing themselves, et cetera, then or give up access to their Bitcoin if they want to use a specific financial tool. There's no way for them to do that today. So I guess for me, like the financial tools that exist for Bitcoin should retain as many properties as possible as Bitcoin itself.
Yeah, and honestly, I feel like it's kind of a shame the state of financial tools for Bitcoin. And I know that like being attached to fiat and needing to like transfer value from fiat is one of those challenging aspects. But I'm excited for what's to come next that have more of Bitcoin's properties. Don't be shy, guys. Jump in. Let's go.
Parker, Jeremy, you got anything to add?
Yeah, honestly, I kind of picked up the rules, but I was kind of tuning CK out when he was describing what the specific rules are, but I'm gonna kind of just go with it and ignore it. But
Don't worry about it. We'll tell you when to drink.
I'll drink my whiskey as at the end of my sentence. I'll drink water. No, so I mean, I think that Bitcoin native just means building for Bitcoin. I think each of us that's working, there's some market segment that's underserved within the Bitcoin community, or it's either underserved or it's not being served optimally. And if you just focus on Bitcoin and build something for those people, you're going to build something that's better. And so in the context of Unchained, we're really building with the idea of helping those that want to hold their own keys and that want to interact with multi-sig, and that also vertically integrated in a way where they can access financial services as they need. But that's not for everything. So as an example, I'll dox my dad. I've got him onboarded with River because he's not somebody that necessarily needs to be interacting with his own keys right now. Maybe we'll get him there in a year or two. But for the people that are interacting with our keys, we want our service to be the best application. And if we were building, because historically, and when I joined Unchained, we supported Ethereum. And one of the reasons why we dropped it was, one, so that we could focus on Bitcoin, but two, because we were building around native multi-sig in Bitcoin. And multi-sig is something that is native to Bitcoin. It's native to protocols that are copied from the Bitcoin protocol, but it isn't native to the plethora of altcoins or shitcoins. And ultimately, like Andrew mentioned, we want to be very deep in terms of the services that we offer, and we think we'll ultimately be offering greater value to our clients if we're just exclusively focused on Bitcoin. We'll always be aligned and actually delivering not only greater services, but the way that we deliver them from a technology perspective will always be form fit for what serves their needs best.
Well said.
If I can jump in there, Parker, like I think what you mentioned about Ethereum actually kind of hit home for me, at least. I think people underestimate the amount of effort that's required to maintain services for multiple blockchains, and the amount of kind of focus that is taken away from just focusing on Bitcoin itself. Like we used to be a company that we were building cross-chain tools for Bitcoin and Ethereum. And 6 months ago, we kind of had a look at the space, and we're like, this doesn't make sense. Like if we're going to build sound infrastructure for sound money, we need to be focused on Bitcoin only. So I think that's really interesting.
So I think that the way that Bitcoiners think about infrastructure is a little bit like playing Jenga. And the way that works, if you haven't played Jenga, is you take like a stack of blocks and kind of tower them up, and you like take one out and you put it on top. And what you're saying is like you start with something secure and stable, and if you carefully add things one by one, you eventually get like a tall tower of things that are available, and like it should grow to whatever height you want it to be. In the Ethereum world, I don't think that that's really done. And it's not necessarily good or bad either way. But the way that Ethereum works is you're just like, well, if you have like, I don't know how many blocks you have in Jenga usually, but let's say 100 blocks, you're only going to get so high eventually. But what we're going to do is we're just going to dump 10 times more blocks, and we're just going to have a big pile of blocks. And like, that'll probably like get there eventually. And for better or for worse, if you go, and recently I have like a Telegram group where there's like 100, 200 people. I'm like, Bitcoiner learns Solidity. I've been taking a serious look at what exists in the Ethereum ecosystem to learn what tools are available, what the state of the art is, because I want to produce facsimiles of that for Bitcoins, that these tools are available for you guys to all use. And honestly, there's a lot of good stuff. Like, there's a lot of noise, there's a lot of jumble, but there's a lot of pretty interesting infrastructure that exists for Ethereum that it's going to take Bitcoin a very long time to get to make that actually like available for developers to build products and services on top of. And I think that it is worthwhile thinking through, like, as a community, like what our priorities are in terms of incrementalism and progress versus accelerationism. And I think that we right now are on one extreme, Ethereum is on another extreme, but there's ground to be gained for either side on like a more moderate strategy where you're saying, okay, like we actually do want to fund more like moonshot efforts, because if it actually works out, and I think that you see this in Ethereum where like some of these like ZK rollup things, like, or whatever optimistic rollups or Tornado Cash, like those are actually kind of starting to work, it looks like. And that's just like a jumble. Like there's all this crap coming out that's useless, but hey, actually for payments protocols, like some of the things that are happening are actually looking pretty neat, like might actually solve some of these fundamental problems. Bitcoin, because we go so incrementally, we don't capture any of the potential volatility and things that could be built that are like further out that we can then connect back to what we're doing. So I'd like to see more of that in Bitcoin. I'd like to see us more aggressive in developing tooling that is clearly in the prototype category. If you look back historically in computing, you can watch Douglas Engelbart's The Demo. It's a video which basically shows like an entire modern technology stack, like, but it's in 1960. It's like there's like a video call, there's collaborative coding, there's like everything was done, and they knew how to make a demo for that. They didn't know how to actually make the infrastructure for everyone in the world to be able to do it. But I think what that did was it set a clear goal for like what the community was trying to build, of the computing community in general. And I think ultimately we're talking about how Bitcoiners are jealous of like maybe the DeFi stuff, they want to get in on that. That's what Ethereum is doing right now, is they're defining the types of applications eventually that people really are going to want to interact with. Whether or not they're degenerate and scammy right now is one question, but if you actually look at things like Uniswap, I think is a good example. Screw their governance token, like I don't care about it. But if you actually look at the design of Uniswap, like that's pretty interesting. Like there's a real like use for that, and there's a real goal. And if we could have something like Uniswap on Bitcoin for all the colored coins on Bitcoin, like that would be great. Now we don't know how to scale it, but as a demo, it's actually really quite compelling, and it gives the community something to coalesce on and say like, okay, well, we're going to figure out how we can actually provide and offer this. And we maybe have a design language around how you can build secure applications that people can download and run, and what plugins should look like, how people should be verifying these sources. Like Ethereum is building up that information, and I'm worried that even though Ethereum's foundation is significantly weaker than Bitcoin, if you go up just like one layer, they're going way ahead and have a lot of tooling that we just like don't have right now. And I don't hate our approach. Like I still think it's the winning approach if I had to pick between one or the other. But I think that what I'm trying to do personally is like go a few years out and build a lot of the stuff to let people kind of imagine and dream what Bitcoin is going to do. And hopefully that's going to motivate the way that technology progresses for Bitcoin. Sorry, I'm long-winded, but I'll like drink half my drink after saying that.
No, that's great. Thank you. Thank you for bringing that. And yeah, Parker, looks like you want to jump in.
Yeah, I was just, I think from my perspective, we think that foundation is everything. That adoption of Bitcoin is exclusively because of that secure foundation. Or at least I don't want to speak for everyone at Unchained, but my view, and I think for the view that a lot of us hold is consistent with that the reason why Bitcoin is viable is because 21 million is a credibly fixed number, and that the existence of Bitcoin in many ways, or practically in my personal opinion, in every way, obsoletes all other forms of money. And so that secure foundation is the nexus of everything, and such that because these other currencies have weak foundations and because Bitcoin exists, that kind of whatever they're building on top is, as we get to that as an application. And again, I think about it from a perspective of maybe 2% of people in the world have Bitcoin today or have any material exposure to it. And in the future, that's going to be 100%. And that it's going to be 100% because the foundation is secure. And that if 2% of people have Bitcoin today and 100% of people are going to have it. The two most pressing things that we need to do, even though they're incredibly vanilla, are help people buy Bitcoin and help people secure Bitcoin. And kind of in our context, help people hold on to it for the long term. And that occasionally means borrowing against their Bitcoin should they need to. I think as Bitcoin adoption increases, again, a less sexy thing or more vanilla thing, but then it becomes as population density increases, then payments are going to become the next logical thing to do. That's something that has been solved before at an application layer, but not necessarily in Bitcoin. So things like BTC Pay Server then become increasingly interested to what it is we're doing. But again, everything really stems from that foundation, and it really will, I think, in our view, guide what happens in the next 10 years at least.
If I could jump in real quick, I would add, the way that I see building on Bitcoin, building finance on Bitcoin is actually, it's like a simplification of what Bitcoin, what finance actually is. I'll drink after all this. But basically, the way that I kind of see the world today is the only way that you can get ahead in the financial world is to basically just create all of these ridiculous financial tools, all of this leverage, all of this, complication where the middleman kind of takes from everyone else. And like, that's the only way that it can continue to grow, is to create this new kind of complexity in the system. And, part of what Bitcoin offers is not real growth. Right. But part of what Bitcoin offers is like this system where, you can just hold your Bitcoin, be secure, lend it out. That's something that'll never kind of leave society, lending. But so many of these other financial products that we have in today are just like ways to try and rat race yourself into success. I just don't think, a functioning financial system needs that. So I would just throw in that one of the things that building, finance on Bitcoin is really just simplifying it and making, drilling down to the core of what people need in their financial products and just building that. I think that's a really awesome kind of addition that Bitcoin creates.
So I want to jump in here, and I'm sorry, I'm gonna actually go to you, Russell. But I know Tantra Labs, you guys do some like DeFi stuff. Like, I'm actually curious, like, is what's happening on Ethereum something that you guys like think is worth paying attention to and worth looking at as a case study to bring back to Bitcoin? Or is it something where it's just pure noise and like the future is going to be built in a different light?
Absolutely. And it's so funny. I am in total agreement with Jeremy. And I think at Tantra, we reflect a lot of the ways he's thinking about the technology. In the beginning, a lot of people said, Litecoin is the testing ground for Bitcoin, but really money is the testing ground for Bitcoin. And Bitcoin was created because we saw the money experiment fail. And so at Tantra, Kagan, my co-founder, and we just had a podcast about Ethereum where we talk about all this. And it's basically, I'm going to say some words that'll make everybody, I'll just put a different thought in your head. It's that Bitcoin is a Ponzi scheme. Ethereum is a Ponzi scheme. The US dollar is a Ponzi scheme. And so the idea is you're playing a game. Money is a game, and we were all born into it. And in order to live and operate in the world in which we exist, we have to play that game. Unless you want to go live in a cave and become a monk or whatever it is, you have to play the game. And so Bitcoin, like Parker is saying, and I totally agree, the rules are set. There's 21 million. There will only ever be 21 million. It's verifiably true. And with Ethereum, it's a little bit different. They have inflation, they have all these other things. And we're not going to get into that debate. But the whole point is that with your money, what do you want to do? What is it that human beings want to do with money? And I think Uniswap is a great example of utility. And think about, like, for the last 100 years, if you wanted to go to the stock market and order stocks or shares or own something, you needed a broker. It was hard to do. You had to call somebody. Then it was on a computer. Even today, it's a market order or a limit order or a stop loss, or I have this many shares. It's fucking complicated. Uniswap, you click a button. You literally say, I want to take this, turn it into this. Okay. That's innovation. And that is truly like power to the people, because now you can take something that was so esoteric, so complex, so difficult, and you put it into the hands of the people. and you give them the ability to do that with their money, with their sovereignty, and nobody can tell them yes or no or don't do that. And I think in so many ways, we've talked about this for a long time. It's like in 2017, Ethereum led the bull run because people wanted ICOs and they wanted to come into this market. And the way that they came in.
Sorry, but I disagree with that. That's the mirage, but.
Well, I mean, you can, if you look at the data, it shows that the price was there for Ethereum. People were buying Ethereum to get into ICOs and then putting money back into Bitcoin, putting money back into Ethereum. And the reason that is because human beings are greedy. We want money. This is right now, this market, and we all know it, most of the people are here playing a money game. Like until you get people that are like 1 Bitcoin equals 1 Bitcoin, people still are saying 1 Bitcoin is worth $11,000 today. You're still thinking in the old mindset. You're still playing the old game. And so
yep. There's a transitionary period though.
Yeah.
So well, why is what's like that transitionary period, why is that not skeuomorphic?
So the way that I think about it is like you have to give people what they already understand, which is what Ethereum did and is doing. It's giving people CDPs, it's giving them leverage, it's giving them loans, it's giving them degenerate bullshit to make and lose all of their money. And so now you're getting everybody coming in to do things that they're familiar with. Not everybody's familiar with hard money, Austrian economics. Not everybody agrees with it. And it's not as fun. It might be a way to put it. And again, this is all, opinion, but I personally believe a lot of Ethereum is a testing ground for what utility can we build with money that makes sense for people. And not that I think leverage is one of those things. I do agree. I think peer-to-peer lending is great. I think Uniswap is great because it makes it really easy for people. And I'd love to see these things on Bitcoin. Ultimately, I think anything in crypto that we start to take money away from the banking system and we start to put it in a public place where everybody can verify transactions, everybody can see what's going on, no matter what, it pushes Bitcoin forward. And I will always be Bitcoin to the core because I think that hard money in general it's the only game that no one can change. Like, you just can't change it. It's there. It's written in code and you agree to it.
Let's jump in, Matt.
Yeah, I mean, I think this is interesting because I agree with both Russell and Jeremy that Ethereum is a good testing ground, but I think it's a good testing ground for what should be done and what should and can be done in Bitcoin, and also what shouldn't be done, and like the way that it's architectured. Because like one thing that's interesting is as Russell mentioned, like the freedom of what you can do in Ethereum and the freedom of being able to go on Uniswap and swap any asset that you want. But at the same time, that freedom is actually parasitic to the Ethereum chain itself. So, people don't realize that Tether, ERC20 Tether is parasitic to Ethereum. Once Ethereum goes to proof of stake, CDPs, where you can lock up your Ethereum and get DAI, is parasitic to the chain because it takes ether away from securing the chain. And so I think it's important for us to realize in Bitcoin, like, how can we ensure that the soundness of BTC itself, while also enabling all these different financial applications to be created without negatively affecting what people can do with Bitcoin today.
So I think that's where a lot of corn people have some weird ideas about the free market, where ultimately in a free market, consumers will consume goods that are like most efficient and like give them what they want. And I think if you look at the censorship resistance angle of Bitcoin, and now I have to drink, I tried. Look at the censorship resistance of Bitcoin, then from that perspective, Bitcoin is hyper libertarian, right? Like we all know exactly what, but if you look at the technological availability, Bitcoin is hyper authoritarian. It's like, here are the things that you can do, and it's just that. And if you want to get anything even incrementally more, you have to convince everyone in the world. And there are people who will like singularly make it a campaign to like stop you. And I think that is like, there are some strengths to that, but it ends up being a much more closed society. And what I worry about is that in the world, like, it doesn't really care about like principles. It just cares about like, did you get shit done for the lowest cost? Like, that's the way that the world works ultimately. And right now, essentially for Ethereum, you can imagine it that people are saying, we want to experiment and play with these things. We want to have these things available. And actually, we're willing to pay these absurd privacy and gas and stability costs in order to get access to these things right now. So it's not that there's a problem with Ethereum the way it is. It's just that people are willing to pay these costs in risk exposure to get access to the platform. So, you know, if Bitcoin had it available, people would do it on Bitcoin, but it's not available. And that's fine for Bitcoin to compete in the larger market. The risk is that if we ignore what's going on there, like one day if people decide this is what they want, like that is going to exist as an ecosystem. Like if Uniswap is really great, that will be the way that people expect to be able to trade goods on a blockchain, right? It's going to be the best way. And maybe it's not right now, but eventually maybe it will get there. And I think that, you know, if we're sitting saying, okay, well, hopefully one day we're just going to figure out how to offer it, we are not capturing the value that these ecosystems will capture. I mean, I would put, like, who here would put money down on ETH, but they get rid of Ethereum and they make the Uniswap governance token like the main asset? Like, to me, that sounds cool, because then, you know, it's ideally something that is voting that's balanced on all the tokens. It solves some of the issue with that Matt brought up with like, oh, all these things are rival to the proof of stake. Like, okay, if you find a way to make proof of stake happen through, you know, LP providers and Uniswap, then, you know, maybe that magically, you know, makes proof of stake aligned on, you know, like how much economic weight is voting. So I think that there is like a real risk that if we don't actually like push the envelope on what we have a pathway to making available, other ecosystems will do that, and then they'll get economic interest. And it's sort of like Tor. So Tor is actually one of the worst privacy networks for privacy, but it's efficient, right? There are other things like Mixnets, there's like, I forget the name of some of the other ones that actually have significantly better anonymity properties, but nobody uses them because they're inefficient. And because they're inefficient, like their anonymity set is smaller. And so your privacy is actually worse because it actually matters to be in the biggest pool with the most other people. So you might have a future where all the hardcore sound money enthusiasts are using Bitcoin, but that's like, you know, the room of us 8, you know, and that's it. And, you know, there exists another ecosystem which includes a lot more people who want more diverse things. And then that's actually where most people are getting most of their stuff. And, you know, I'm not saying I want Bitcoin to be Ethereum and I want us to have everything that's available there. I'm just saying that like we need like, you know, we need to provide a little bit more. We need to go a little bit further than we're going right now to make these things available. And also from a self-sovereign point of view, I don't want to tell people that the best thing to do is to like use some service for custody. I want to have like, hey, look, here we have self-sovereign custody, best in class, better than anything else that you could ever do. Bitcoin #1 best. Like that's what I want. So, you know, if anyone wants to jump in, but
hey, for sure. And I think Andrew actually needs to jump out soon. So Andrew, I mean, would love to hear your reaction to this conversation, and from there, maybe you can give your last word.
Totally, yeah. So I think, you know, really what we have to ask ourselves as a community is, what do we want the goalpost to be? You know, for Bitcoin to be successful, does it need to do everything that Ethereum can do? Does it need to have a wide range of financial tools? And if so, over what timeline? I think it's more important that we get it right as opposed to getting it fast. And, you know, that really kind of underpins the philosophy about the Bitcoin space, which is, you know, move slow, but get it right. Whereas Ethereum has the move fast and break things mindset, which will come at a cost, I think. And, you know, I think it's interesting to watch what other chains are doing right now, for the reason that it provides us with, you know, basically a sandbox to see how this stuff plays out. What do people like? What don't they like? What works? What doesn't work?
Any last word?
That was mostly, I just really appreciated everybody on today. This was awesome. Had a great time.
Yeah, man, it was too short. We got to get you on for the full session next time. But thank you for joining. And
before you go, I want to ask you a question. So there's been some rumors that you have a pretty new customer on River who's buying a lot of Bitcoin. Any comment on that? I've seen some
So I can't speak of
Twitter gossip.
So I can't speak about any specific customers, past, present, perspective, etc. But I'm very interested to if you guys think there's anybody else, like any other big companies out there who would like to buy some Bitcoin, send them our way. We do accommodate big size, but I can't speak about any specifics.
Awesome. Well, thank you for what you do. I'm sure River is going to continue to be a pivotal part of, the future onboarding into Bitcoin. And thanks for jumping on. Just to kind of jump back into the conversation, who else wants to kind of, chime in on what Jeremy just said? Parker, we haven't heard from you in a little bit.
Yeah, I mean, I think I disagree with a lot of what was said there. Not adversarially. I think I believe everyone should go out and try to build whatever it is they want to build, and if they have a different vision, they should build a different vision. And I think there's a few things that I think are critical, or at least I think the way that within Bitcoin, at least how I think about a lot of it is, if you're building. If I think about money as a communication channel. It's the primary way that information is communicated throughout the world. It's like people would say, like Google is like how people find information. It's like, no, a pricing system that emerges from a form of money is how people learn all of the critical information that they need to know in their life. And that if you are going to build a monetary system on a decentralized basis in the digital world, that the entire world will never be able to somebody in San Francisco, Austin, Texas, New York, Hong Kong, Shanghai, Laos, South America, Central America, Europe, Russia, they all won't be able to be working on the same monetary network if it was at all easy to change that network. Because the single thing that we're all agreeing upon is the monetary medium and what is a Bitcoin and what isn't a Bitcoin. Like literally that one Bitcoin equals one Bitcoin. That's what Bitcoin does. It doesn't know anything that exists outside of it. And if it were possible for somebody to build a cool app that had to speak directly to the base layer, that would be inherently insecure. You couldn't build an entire global monetary system on top of that. And so I think that realistically, when you think about, it's like we wouldn't even have the concept of what something costs if money didn't exist. So it's like if we're thinking about all the costs that are associated with some aspect of something else, it's because we have a form of money that's reliable to then price those costs, or for us to even conceive what those costs are. And so I think that is, in my view, the principal benefit of Bitcoin. It exists for a reason. You don't want the protocol layer to change, because if it did, then it would be inherently insecure and we couldn't all rely on, it becomes circular. We wouldn't be able to rely on it as money if somebody could, create some widget that potentially closes you out of $150 million, which happened in the Parity case, right? Like, and so when I think about what we almost exclusively focus on is the security of Bitcoin, it's thinking about, I've just got some people that have millions of dollars or tens of millions of dollars, and they just want to make sure that that is there, and that they can sleep at night and they feel secure. And then as they need to interact with that money, I help them do that. And so it becomes a very singular problem. Like, I have never even heard of Uniswap. I don't even know what that is, And so I think that when we're uniformly kind of thinking about just problems with Bitcoin, it doesn't mean that Uniswap's bad. It just means that if I've got my head down thinking about Bitcoin and the things that Bitcoiners need, I'm going to give Bitcoiners something better than if I was kind of, all over the place thinking about different problems, because I just wouldn't be focusing, as singularly or as hard about what the Bitcoin community is. Again, it doesn't mean that those other communities aren't going to produce value. I have some doubt, but it is the consequence of doing many things versus doing one.
Russell knows this number. How many Bitcoin are wrapped in Ethereum right now?
Oh, geez. I can tell you in the last 2 weeks alone, over 40 million have been wrapped. Something crazy. Hold on, I'll pull it up for you.
Yeah, I mean,
that's more Bitcoin than exists. 40 million.
No,
he spent
$40 million
in the last 2 weeks.
Yeah, and like I would say, like, you know, because I saw when kind of after the MicroStrategy news, one of CK's good friend, our good friend David Hoffman, resident ETHED, you know, say like, you know, screw MicroStrategy, all this Bitcoin exists on Ethereum. And I would say there's zero Bitcoin that exists on Ethereum. It's just Bitcoin has no concept of the outside world, so it's just who has control of keys. So
okay, let me pause you. So if you're making the claim that Bitcoiners don't care what's going on there, like they do clearly do, because people are like, I don't want people to have Bitcoin on Ethereum, but they do.
I don't.
That's what
why do I
Bitcoiners
care?
want.
Why do I care? Why would I care? It's like I don't think about it as there's Bitcoin on Ethereum. There's keys in Bitcoin, and I have no idea what a wrapped Ethereum Bitcoin is. But all it can mean is that there's some mechanism that's controlling Bitcoin keys, and it's controlled by some other token that is literally living on somebody's server, and that there's some rule that says when that Bitcoin can move. So whether it's sitting on a Trezor or sitting on a server that's running some other Bitcoin protocol, it's just a key, and it's creating a different rule by which that key can be spent, but it's not on Ethereum.
So it's 64,000 Bitcoin locked right now, about $700 million in USD worth of Bitcoin on Ethereum.
So where are the keys, Russell?
So a custodian's holding them. There's a few different custodians, and then it's a third party. It's a trusted third party. So I totally.
But like, would it be like BitGo? Would BitGo be the party? Because I would say that Bitcoin Bitcoin would be at BitGo, and they're using some Ethereum protocol to determine how it is they unlock it, but it's on BitGo's server. So BitGo could just boom, stop. You can't.
This is just a semantic. I think like what
it's not a semantic.
What my goal is to make Bitcoiners as secure as possible, right? I want people to have security, and I want them to have freedom of choice. And so I don't like that the way that people are getting this experience is by going through BitGo or something. Like that sucks. Mm-hmm. But the experience that people are seeking is they're saying, what is the way that I can do some of these things with Bitcoin, that I can do something like earn like relatively passive yield, right? Because I want to loan out Bitcoin. I have like a huge stack. I want to loan it out. I am okay with BitGo in my trust model for that. So I'm going to do that. And right now, one of the places where there is a market for loaning Bitcoin is on Ethereum. So I think it's pretty reasonable that if you're just like a hodler and you're like, how do I get extra yield because I want to stack more sats? I'm okay with BitGo being in my trust set. Like what I think I'm saying is like, there's stuff evolving out there. It's important. You can't just turn a blind eye to it. And Bitcoiners, like a pretty good number of them, people who are pretty active and like willing to try stuff, like do want some of these things. They don't want everything, but I would love to see all these Bitcoiners that are using Ethereum just be like, oh, screw these Ethereum, like yield farming shit. I just want to be putting money into DLCs and like loaning that out. And that's where I think we need to just push that envelope faster and harder to make these things available. I'm not saying that we need to like screw the base layer, which we want to be robust, and screw the monetary policy. I'm just saying that we should put way more resource into actually delivering these things, because the rest of the world is moving very, very far away from what we're able to offer right now.
So Parker, I have a question around that, because I do agree with that, and I want to phrase it a certain way, like, because it's all about the free market, right? And the idea is like, so I pulled up this chart. I could share my screen if you guys want, but basically $300 million has moved into WBTC in the last 30 days. And when we talk about a free market, what that means is that $300 million believes that they want to, earn yield on their Bitcoin. And so for me, when we look at that, yeah, it's a very small amount in the scope of Bitcoin. Like I think it's it's like 12 basis points, like 100.12%. But that's $300 million worth of assets that they want to do something more than what Bitcoin can do. And so I think, to Jeremy's point, and what I want to ask you, Parker, is do we give the people what they want, or do we say, base layer wasn't built for this. This is what base layer can do. And then we start looking at, layer 2 solutions and potentially wrapping Bitcoin.
Yeah, I think in my perspective, it is that this is all that base layer can do, because if not, then it won't be secure, and therefore we won't have money. Because if it's not secure, then money doesn't exist. Then all this other stuff is just, kind of.
So I think what you're missing.
Not well. I promise you, I'm not missing anything. You may.
Well, you're missing
you may have a disagreement,
Right.
but like I think that ultimately to that question is like, hey, I think that people who there's 460,000 Bitcoin that are sitting in the grayscale, and I think that that's dumb. But to each their own. Like, go for it. Like, that's people that just want to sit on, Bitcoin that has multiple layers of counterparty risk. So people, like, our current financial system is evidence that people do a lot of dumb shit. And just because people do a lot of dumb shit doesn't mean that they're not going to get burned for it. And what we have in Bitcoin is that if you make mistakes, if you put your Bitcoin at BitGo and think that it's on Ethereum, like, and you lose it, that's on you, right? Like, that's going to be on you. And I think that one of the things I would say is, because we love what you guys are doing at Tantra, but you also recognize that in that respect, that, and I think in any respect of lending, and this is what we recognize on the case of dollar lending, and I think what you guys recognize in the case of Bitcoin lending, of when people lend you Bitcoin, that there's inherently trust involved when you're going to lend something. Because if I'm lending money to somebody else for something in return that exists outside of that monetary network in the real world, like we're talking about 99.99% of all lending activities, it's I'm going to give you money and then you're going to pledge to me something of yours that exists in the real world. That inherently depends on trust of something. It's connecting a monetary network with something that's outside. If you try to merge those two things, you're going to get a monetary system that doesn't work. And we all know, if we think about it like practically, it's like, hey, what is the activity of lending in the real world actually mean? It means, okay, I've got Bitcoin, I'm going to lend you Bitcoin. And even though we're kind of suspended in this state, let's think about it in the context of a house. You want to borrow my Bitcoin to buy a house. There is nothing that I can do to enforce ownership of a house because that house lives in the physical world. You want to get the house in the blockchain? Sure, maybe. But like, realistically, it exists in the real world, and enforcement of somebody living in a house like doesn't exist in the world of Bitcoin. And that exists for any context of lending anything in the physical world. And so I think more practically, it's lending is inherently a trust-based process, and it's okay for that to exist at a higher level because Bitcoin is solving the money problem. We're solving the problem of the central bank being able to print money ad infinitum. And in that closed loop system, I like to tell people, Bitcoin can only do one thing and it's fine, or it can really do two things. It can issue currency and it can tell you what is a Bitcoin and what isn't a Bitcoin. And that inherently is a good thing. And it's okay being a closed circuit. And I think to your question, then we go up to like being at trust minimized layers for layer 2, layer 3, or working with third parties like Unchained in the context of our lending, or Tantra in the context of yours.
So first of all, I love that this drinks in quarantine is getting spicy. I love that there's some disagreements.
I'm drinking because I said Bitcoin a shit ton. I must have.
Yes, and I just hope that and I love that this is a respectful conversation. To everyone in the audience, like, please give us your questions. Like, in my opinion, no one knows what Bitcoin is. Bitcoin is this elephant in the room, and we're all blind men just trying to figure out what the hell is here. So like no way are we gonna know. But I'm loving that like how we're hashing this out. How should we take this moving forward? Matt, Jeremy, do you guys want to jump in?
I just wanted to say, like, I think Parker made a good point. Like, Bitcoin solves the money problem, but I think one question we need to ask ourselves is, how should Bitcoin, do we want Bitcoin to be just like gold, or do we want it to be programmable money? Do we want to end it, it to end up in the hands of, any type of financial tools that you want to use with Bitcoin, for that to just end up in crypto banks? Or do we want people to have, for the financial tools that are used with Bitcoin to retain as many properties of Bitcoin as possible? Now, obviously, lending, for example, involves some amount of trust. And so that needs to be accounted for in whatever financial tools you create. But I think that's one big question, is how many of the properties of Bitcoin can we retain with the financial tools that we create for Bitcoin?
It's honestly a really deep question. I think when you look at Bitcoin, something that we always talk about is like Bitcoinization, right? A lot of people talk about, and what that really means is like you go to the store to buy a water bottle and it's 100 Satoshis. And when you look at that, and I'm going to call it grandiose, like I would love to live in that future, but we got a long way to go before we get there. And you're not being honest with yourself if you think it's going to happen in the next decade, because it just, governments don't work that fast. People and humanity does not work that fast. Sorry, I got a puppy who wants to chew on my headset, but thank you. So ultimately, when we look at the problem, like I think that you can have programmable money that is gold. And I think that's what Bitcoin is. And Parker, you said you don't know what Uniswap is. And I want to answer that because I think it's really important. Right now, if you want to buy Bitcoin, you have to go to a trusted third party. You have to go to someone. You can't just go to the internet and buy money, because there's money today is physical, but we're turning it digital. It's becoming digital. Governments are making it digital. The United States is making a digital dollar. And as that happens, the easiest way for us to transact is going to be decentralized. Uniswap is a decentralized exchange that makes it easy for your grandma to buy Bitcoin, because she goes, I have these things called USDs and I want to turn them into this thing called BTCs. And she goes, and it's done. And I think that future is a future that we should all work towards.
So let me just jump in.
Can I ask a
Maybe
question there?
because grandma doesn't have USDs. Grandma doesn't have USDs. So we need to see liquidity in these token things. And I don't know if that's actually going to be a thing. Right now, we only see liquidity between dollars and Bitcoin. Parker.
But I just wanted to say one thing, because the only way that a dollar goes here and there is in that digital world, even your digital world, it's through the New York Fed. So some abstraction may go from here to there, but that's literally just a dollar that's sitting at a financial institution. Because the actual transfer of reserves, from bank A to bank B, that technology is sitting on top of, only happens if the Federal Reserve says, yep, good, I'll clear that wire. Yep. So I just wanted to kind of highlight that.
No, great point. So that's why I think it's going to take a while to get there.
So I think the point that I was going to make earlier, sort of when I rudely was going to interrupt Parker, but was...
Yeah, and I didn't mean to speak over you, Jeremy, either. I apologize about that.
No, all good. This is fun. So what people are actually working on right now, like when I'm talking about all this stuff, I'm saying we've got to do more. Like, I'm really not saying we got to take the EVM and shove it into Bitcoin, like script execution. Like, that is really not what I'm saying. What I'm saying is we've developed this really cool base layer, and then we're developing this layer 2, and then maybe even these like layer 3 things that live on top of layer 2. And then what's happening is people are going, we kind of need this little different API on the base layer in order to make these things work. We need this interface to exist. And it's this minimal interface. And there are a few things that are like this that people are working on. And they're saying, if we have this, there's all this great stuff that we can do. And this gets rid of, this party or that party. And, it fixes this problem and it makes this more secure. It enables this, enables that. And this is all cool and great. And it's not saying it's enabling it on the base layer. It's saying it's enabling it many layers up the stack, right? And what I think is happening in the community, and this is why I'm so sensitive and fired up about this, is people have learned somehow this ossification narrative that we need to make sure that Bitcoin never changes again. And Bitcoin has to only do the things that it's doing right now. And anybody who works on these higher layer things knows that those networks will fail if Bitcoin never changes again. Lightning will not, I'm sure the Lightning developers will disagree, but if any prev out doesn't go through, I would say that it's probably unlikely that Lightning ever, breaks out in a real meaningful way.
Great
that
point.
Type of change is so critical for those networks to actually function in the way that we want them to function, that it's almost not worth working on if we're not going to get it. And I think that that's where what I want to see is I want to see us put more aggression towards getting those very important changes to the base layer that really aren't changing what the base layer looks like. They're just changing a small aspect of the interface that allows at a different layer, other things to blossom. We're not talking about an EVM. We're not talking about statefulness, just all within the UTXO model, all within regular, digital signatures and predicate-based script evaluation. like those types of changes, I think, are just really, really critical. And that's what I'm hoping to be able to deliver for people is like, you know, one of the other changes I worked on that I haven't really talked about publicly is something that solves fees in Bitcoin transactions. Right now, if you want to do a Lightning contract, every 2 weeks, they come up with a new vulnerability that basically Lightning is insecure because if you played this sequence of transactions, your HTLC that you have to redeem gets shut out of the mempool, and then somebody steals your money by letting it expire. Like, it comes up so frequently. We keep on going back to these designs that are based on how can we make it work based on what the base layer is doing today. And then they tweak it a little bit. And then 2 weeks later, a month later, it gets broken again, and it's broken again, and it's broken again. And what I want to do is I want to say, okay, if we just add one small soft fork feature that really is no different than what we're doing already, can we actually systematically solve this issue and then never have to worry about how we're paying for transaction fees when we're doing protocols with multiple participants again? And I think that that is the sort of energy that I want to see directed at Bitcoin. And I think that we can be much more methodical and rigorous and regular. So those are the three things I'd like to see. You know, we can do scientific study, we can come up with proposals, we can do peer review, but then we actually have to ship stuff. And I think that that's what we don't do right now. It takes forever to ship stuff. We weigh the merits of alternatives. And while we're weighing the merits of these alternatives, we languish. Lightning is 5 years old, right? It should already exist in a meaningful way. And it doesn't quite yet because we're still waiting for some of these little things that have been known about for like 4 years to ship to be able to move it forward. And that's just the energy I want to see going into Bitcoin because I want it to succeed as that base layer.
Yeah, I completely agree. To add to that, Jeremy, I think like one big question here is, what do we want the abstraction, layer for different tools for Bitcoin to look like? Do we want it to be, oh, you're using financial tools with crypto banks, or do we want it to be you're using, financial tools at layer 2 or layer 3? And if we don't move the needle forward, it's going to be it's going to be financial tools on top of crypto banks.
Be your own bank, baby.
So if I could jump in too, and just kind of piggyback on what Matthew and Jeremy both said, and also, I'm not saying anything that you guys don't already know, but basically, what I'm gathering from this conversation is we all agree that at its core, at the layer 1, Bitcoin, the only thing we should really be optimizing for is security. Let's make the most, absolutely hard money, secure thing we can possibly make. And then wherever we can, Bitcoin's permissionless. So that means Bitcoin is permissionless to build on a different layer. And so we are never going to be able to stop people from being able to create some sort of risk-induced second layer to Bitcoin that, they are custody, like a BitGo, like whoever, right? They will custody some of your Bitcoins. They will, create whatever financial product you want. And there's absolutely risk involved with that. And I think one of the downsides is that we're so nascent that we haven't seen enough, and this is going to sound like bad, but like we haven't seen enough spectacular failures of those systems yet in Bitcoin, where people can intuitively understand what the risks involved really are. Because all we see are the counterparty risks of like an exchange that gets hacked, right? But there's so many other risks that are involved in these kind of abstractions onto different layers. So I think I agree both with what Parker and Jeremy and Matthew and Russ, everyone's saying, which is basically like, Bitcoin itself is just this layer 1 that is the hard money, the digital gold, the, everything that we can feel comfortable with from a security standpoint. And then what Bitcoin can enable are all these different financial products, these different tools that all will inherently carry some extra risk. And so it's just a question of like, how can we make sure that the risk is as mitigated as possible, but also can open up some really interesting things that people can play with. And so I know I'm not saying anything anyone doesn't already know, but I just wanted to kind of frame the conversation and kind of add my 2 cents there.
I think to jive with that, we can think about it as Bitcoin is Hong Kong, and right now we're all the net jobs hanging out in the Kowloon walled city, and it's 20 years ago. And what are we gonna do? Like Hong Kong died. Hong Kong. Sorry if anyone's listening who lives in Hong Kong, but like Hong Kong basically died. It is no longer the entity that it was just a few months ago. And there's maybe still a fight to be had for the people who want that Hong Kong to continue to exist. And that is Bitcoin today, right? We are 20 years ago. We have institutions who are entering, able to offer high quality services. And I think that that's what we have to figure out is how do we look at our community today, figure out what needs to be done in order to keep the part that we all agree is so special for forever, you know?
Yep.
And if we can't do that, then what else are we going to work on? You know, like that's, I think, the question for me.
So I want to jump in here and like, obviously I'm not as scared to say Ethereum. Like I host a podcast called POV Crypto, which is like half an Ethereum podcast. But when I look at the space, like Bitcoin is permissionless hard money. Bitcoin is enabling all of this shit show to happen. And like, I just don't like, yes, I can definitely empathize with Jeremy as a core developer. Like, and I really have no context, but how difficult it is to change Bitcoin as it is. Like, I'm sure lots of people have frustration with that, but like, I don't see what's happening across the entire space as not being Bitcoin. I think everything that's happening is Bitcoin. Bitcoin is enabling this shit show to happen. That's what freedom is about. And like, I don't see how it doesn't all come back to Bitcoin. Like, so I'm not like worried or scared, and maybe I'm just hubris or ignorant, but like that's kind of my perspective. And like all of this stuff is just backing up what Bitcoin is. Like, why isn't Ethereum a layer 2 for Bitcoin? I think it is. Like, it is.
Yeah,
like, how is it not? If people are using it as a unit account on Ethereum, like it's the same as using a unit account on Coinbase or Square or Unchained. It's the same shit.
Let me ask you a pointed question, CK. When does Bitcoin stop being Bitcoin for you?
I don't know. Like, that's a kind of a philosophical question, but I really do think the UTXO set is Bitcoin. But I don't see a world, like, I can't envision a world, and again, maybe I'm ignorant. I can't envision a world where the UTXO set doesn't exist, the proof of work chain doesn't exist, and people aren't mining it. I just don't see that world. And I don't really know what the future holds beyond that.
My answer to that question would very simply be, if I didn't credibly believe that 21 million was a reliably fixed number, then it wouldn't be Bitcoin anymore. And I think that the principal risk to that is censorship at the protocol layer. And so what I look at is, it's like, as long as transactions are not being censored at the mining layer, at the literal protocol layer, I don't care if like Coinbase doesn't send your transaction out or rejects you as a customer. Just like, if you have a Bitcoin in an address and you send it and it's consistent with consensus rules, if it sends, we're good. And 21 million is intact.
So like fungible supply.
Yeah.
Jeremy, if I could jump in, I would just add, Bitcoin stops being Bitcoin for me the moment that I don't own the keys myself. Like once I don't own the keys, like I know that I'm playing with some sort of derivative of Bitcoin. So I would agree with Parker and add that.
Yeah, and I would agree with you, Brand, there too, which I think is probably one of the big challenges. Where like, okay, well, there's going to be 6 billion people and there's certain capacity limitations on the base layer. How does everybody have their own keys? So that is, I think, something that needs to be solved and will be solved in time. But I agree with that. It's like, if we were just all using banks, or if, not to say it everyone has to have their own keys, but I do think of that as a critical component. That like, people have to have that ability to be able to do that. And whether it's at the kind of, I don't expect people to be sending every single transaction on the base layer. I think they'll be working on higher level layers, but for the majority of their holdings, they will be holding their own keys that give them access to verify that something is or is not a Bitcoin.
I would agree, and I would just add in, sorry, Jeremy, you can jump right after me, but even when you are, transacting on Lightning or something like that, you are not, in my opinion, all right, and I'm not saying this is a bad thing, but I would say you are not at that point still holding Bitcoin. You're holding like a Lightning flavor of Bitcoin. And it's not like there's, you're not rehypothecating Bitcoin or anything like that. Unless you have the keys yourself, it is not Bitcoin in the truest sense. It's something else. And like, I think that that's fine to hold something else, as long as you understand the risks that are implied with holding something other than a layer 1 Bitcoin. So I would just add that in.
Yeah, to add on that, I guess it comes down to like, how many of the properties are you keeping from Bitcoin? that Bitcoin contains in the first place. So like with Lightning, you retain the majority of the properties of Bitcoin, whereas with if you put it Bitcoin and Ethereum or elsewhere, then how many of those properties are you retaining? So I guess the difference between a Bitcoin IOU, I mean, even Lightning is a Bitcoin IOU, but it retains the majority of the properties.
Well, I think interestingly for Lightning, you actually give up the most important property, which is if I do nothing, I still have my Bitcoin. Like that's the first one you give up for Lightning, right? And for me, I have coins that I haven't touched for, I don't know, 5 years. They've just been sitting, and that would not work for Lightning channels. I mean, it would work. I could go access it if they moved, but they're different things for different people. I think are the most important property.
So coming back to Bitcoin soft forks that could fix that, is CTV a way that could potentially give that property back to Lightning?
CTV definitely helps with Lightning channels in a few different ways. The main thing that it helps with is being able to open new channels more efficiently and non-interactively. So what that would mean is if I wanted to pay Parker, let's say a Bitcoin, and I was like, okay, I'm going to pay Parker a Bitcoin, but I don't want to do 2 transactions if later we decide to open a channel. So what I can do with CTV is I can open a channel to Parker, and I can send him that transaction. I send it to the chain, and I also send him a little bit of additional metadata. And I say, okay, well, this is actually a channel, and if you want to route any money back to me, perfectly okay. You can just do that automatically. And I didn't need to have Parker online at the time in order for that to happen. But as soon as Parker comes online, there's no immediate path where I can claw the money back. So it would have whatever timeouts you wanted sort of automatically baked in. So there's a little bit of interactivity where Parker has to have a model where he's coming online to learn about the channel that was created within a certain amount of time. But this actually works really well. The example I like to give is you go to get a cup of coffee. And right now with the Lightning Network, the barista, if you want to open a channel with them, they have to have a private key online. Maybe the barista doesn't have it. Maybe it's stored in a cloud somewhere or something. But there has to be a key online for you to open that channel and start signing back and forth. With CTV, I could go to the barista and I can open a channel, and then I can immediately make a payment, or I can make a payment. And the only state that Parker would have to have online is a public key. So we said, Brand said a moment ago that when you stop having that key, it's no longer Bitcoin, but it's also when somebody else has that key, it's no longer Bitcoin because, maybe they can steal it from you unless that's what you wanted. So I think what this helps with is building out infrastructure where people are able to better, and there are a myriad of examples, better able to isolate the infrastructure of their wallet and know where their keys are, where their funds are available, how they can move funds around without having to have keys online or shared with other parties. It really helps with the self-sovereignty, and it also helps with the scalability in the case of creating new channels. So I think it's pretty good, but we'll see how the market likes it.
Anyone want to jump in? Should we go to the next topic?
I guess I would just add I think the topic that Jeremy brought up in the fact that one of the most important properties that is lost in Lightning is the fact that if I do nothing, then there's a chance I'll lose my funds. I guess Sikash, any prep vote, is cool because it helps with that a little bit. Like if you use watchtowers with L2, then, for example, if I trust a watchtower to not, have custody of my funds, but to, be able to just broadcast a transaction on chain. If I go offline and I completely forget about my funds, then, that improves things a little bit because, I can have better assurances that if I go offline, then I'll be able to get my money back. But not totally trustless for that, of course.
Yeah, I can tell you guys that I've got 0.02 Bitcoin on Lightning that I'm not sure is still mine because my channel came down and but when I put it on there, I bought another 0.02 Bitcoin so that I would be okay losing it. But I do think that is a reality that people don't yet, I think that most people recognize that it is, well, one, I think everyone recognizes it is not base layer. There is a fundamental different property. People are trying to figure out exactly what those security assurances are. And I think that realistically, people will not adopt it until they are comfortable because nobody likes to lose Bitcoin. Nobody wants to put Bitcoin at risk. And that they know when they're putting it into a Lightning channel that they're entering into a different agreement. And that I think that in part there's a limitation that payments will accelerate in Bitcoin once adoption density increases to a level that it's just there is more naturally and with more frequency a collision between buyer and seller that both have Bitcoin, but then separately the technology has to catch up, and I think it's going to be one of those things that as people increasingly have that use case, more capital will flow to making sure that the application is secure enough to handle it. And I think what we see now is there's not a lot of money in Lightning channels because people, it is increasing, but people are also they're willing to explore different avenues to potentially open up other opportunities to spend their Bitcoin, but they're not going to do it in ways that risk any material amount until they're sure that they understand the rules and they understand the trade-offs. And I don't think that many people know that yet. And that part of that education will accelerate as the demand for the product accelerates. But until then, we're kind of stuck in this gap.
So I think one thing that's interesting on that, Parker, that ends up being a problem for development, and I don't want to say core development because this is like really just like ecosystem development, is that the timeline for a change to get like merged and released and activated is like measured in like years. And I think, it's okay for Bitcoin to be slow, but what it means is that our hands end up being really tied anytime one of these events comes up. So like, let's say Lightning ends up getting used and there's a problem that needs to get solved. It's like, we'll solve it in 2 years. And I think that ends up being just really problematic for, if you look at like, let's say AWS is just like a random, comparison. If there's a problem with AWS, you call your Amazon rep and you're like, fix this shit. And then they fix it within like an hour, right? And for Bitcoin to be able to say like, okay, look, we will fix this in 2 years, it really limits the adoption of people who are willing to say like, okay, well, how nimble is this protocol if there is a real problem? And you can go down some scary, like paths where it's like, what if we saw substantial government interference with with censorship resistance? How quickly could Bitcoin respond? Now you can have two different answers. Maybe there's more than two. One answer could be, it takes 2 years to fix it. And that's great because, it's going to take that long, but 2 years might mean that like a lot of people die. I don't want to go down the babies are dying because of, high fees, but like, it could mean that like, oh, well, it's this issue is happening. People are getting de-anonymized because we had some issue, and that people are really hurting from that. And that's a risk that you would have if you want to adopt Bitcoin. Now, the other answer would be, oh, well, if the issue is really important, we'll fix it quickly. And the problem with that answer is that goes down an emergency powers pathway, where if there's an important issue, there will be emergency powers almost always end up becoming autocratic, right? It's somebody deciding the way forward. And then that is, I think, a horrible precedent. So I think that's the issue that I see going forward long-term for Bitcoin is we want protocol changes. We want improvements. We want them to be slow and methodical, but we also don't want to get to a situation where we end up with autocratic powers being assumed because everybody's struggling with this, and the economic super majority is like, we need to go forward in this way now. And that's just all we can do. And we're seeing that, I think, right now with Ethereum, where the exchanges have basically been saying, customers have to pay the fees now. And that's not a consensus change, but that is going to have major ramification on the Ethereum ecosystem. Like Vitalik is probably going to have to do something because now every user is going to be like, this sucks. There's going to be some action that happens. And I think that's not good. And I don't know if Bitcoin is inherently immune to that type of thing. If miners wanted to institute an emergency soft fork because they're like, this has to get fixed and we don't want to do it, they could do that. And I don't want that to happen either. Soft forks are easy for miners to roll out against the wishes of users, because they're inherently a rejection of certain transactions rather than a addition of a new rule. Yeah,
and I do agree with that. I can see like, say somebody's developing on Lightning, and if somebody, the more money, the more Bitcoin that gets locked up in Lightning channels, and suddenly someone finds out that there's a vulnerability that can only be fixed at the base layer, that's one of those scenarios that in our current environment, it's effectively one of those like, that's on you, kind of like the attitude is, well, that's not something that's fundamentally a problem of Bitcoin. That's a problem of how you're using it. So we'll look at it, but it's not a critical failure. So I can understand the, for those, kind of those type of challenges and those risks that it presents of it being slow. And so it's not, it's not to, and I think I certainly, I think appreciate those and don't have a great answer for it, and recognize how it can be, how it can kind of slow things down to the point of appearing to kind of stop innovation. But at the same time, it's like, we're all kind of figuring this out for the first time. So it's kind of, I think naturally it's better, living in a world where we accept that as a trade-off of saying like, okay, well, we only get one, because like I do oftentimes think about this as we get one chance. We get one chance to get it right. And that we're more likely to introduce something that screws it up if we go fast than the reverse. And that's why I'm generally more sympathetic to, okay, we can live in this world and we can act more slowly, because I think and I don't know if you guys have read the Bitcoin Standard, but one of the in the foreword, Nassim Taleb said something like, we've now figured out how to do this, and we can easily replicate it if it fails. And that was one piece of the foreword that I fundamentally disagree with. I think that we have one chance to get Bitcoin right, and that if it fails, the whole thing fails, because if Bitcoin fails, then every other cryptocurrency are like, okay, well, if that thing failed, then how am I ever going to trust this other thing? Because it was the biggest. And it's not to say that that's great logic, but I do think that for more principled reasons beyond kind of that high level, that we really do have one chance of getting this right, and that we're more likely to screw it up if we make a change that causes trust to be degraded than moving slowly and having trust incrementally build over time. In the sense of trusting the protocol.
So Parker, I think that's a really good kind of way to, at least for the moment, kind of tie up this conversation. We have about 30 minutes left in the show, and we have one more topic we really wanted to get to that I'm curious to kind of pose to the group. So I'll ask you this question. Maybe Russell, we haven't heard from you a little bit. If you want to start on this question. The question is, in a Bitcoin world, let's say that the hyper Bitcoinization narrative succeeds. What will a Bitcoin financial company look like?
Interesting. In my version of the Bitcoin world, or just like, because I definitely can't tell the future, but in my version, and this is based on a lot of the points I think Jeremy said, because we're seeing it now. And I hate to keep bringing up Ethereum, but I think it's a really good use case. We saw it with Sushi Swap and Uniswap. So if you're not following, it's basically you have open source code, everybody loves it. Somebody says, I'm going to copy it and extract all of the value and give it to the user. And that, in essence, is what we're building right now. We're like, I use Bank of America, right? You know how many times they fuck me? As many times as they can, they'll fuck me, right? As many fees as I can pay, as many like overdraft charges as they can get, that they fuck you. But a decentralized world isn't that. It's, I'm going to use the protocol that loves me, that does the most for me. And I believe that in a Bitcoin decentralized world, that's what we're going to create. We're going to create tools and decentralized platforms that allow people to do what they want to do without needing a third party that literally is there to take their money away, that is literally there to get in the way of them doing things and to prevent them from, easily and successfully doing transactions between two human beings. Like, you and I should be able to exchange value just like that. Why would we need anyone else? You have a phone, I have a phone, you have a computer, I have a computer. Why does the bank need to be involved? Well, they needed to, for the last few centuries, because we were pretty stupid. We are still monkeys, but now we've literally automated it. We're turning it into code. And so I believe that world is a smart contract world. And whether it's on Bitcoin, I couldn't tell you. I hope it's on Bitcoin. And I think that these, wonderful people, everybody on this call is doing their best to make it happen on Bitcoin. And I'm excited for the day when it comes where anyone on this call can transact without any third party in a trusted way and do anything that the old financial world has given, but without the need of that old world, and purely with magical internet money that we all agree on.
So that's a good answer. And Parker, I want to move this over to you. There's definitely going to be a cornucopia of decentralized financial companies, maybe. But what would even like a centralized financial company look like in a hyper Bitcoinized world?
Yeah, well, I don't want to. I'm not saying this in a pejorative way, but I think that it will look like River, and I think that River is going to kind of expand to offer non-custodial solutions as well. But I think that it will look very similar. Hopefully, I think each institution will be smaller. I think the natural consequence of having a fixed money supply is that the money just continues to decentralize and decentralize and decentralize. That doesn't mean necessarily that 100% of all individuals are holding Bitcoin, but it means that like too big to fail is gone. You make mistakes, whether you're securing Bitcoin with your own keys or you're using a company like River or you're using a company like BitCo. If you make a mistake, you own it and everybody else remains unaffected. Now, there's a reality that if enough people screw it up, then the whole thing doesn't become viable. So that's only to an extent, but I really think that, a centralized financial institution in the future looks in terms of services, it will look different because I think that the world, and CK mentioned this at the onset, I do think that as a consequence of Bitcoin, we will definancialize a lot. Like, so many people, they get their money and then they immediately put it at risk. That's how they've been trained to operate because money is today programmed to lose its value. It's like, what if you reverse that equation? What if you say, oh, actually, rather than lose 2%, it's going to increase by some percentage. Not, if we're talking about post-hyper Bitcoinization, it's not going to be, promises of 10x returns. It's going to be just marginally increasing in value. But that small difference of money constantly losing its value versus marginally increasing in value will stop this racket of the second that you take money that you make money, you immediately put it at risk. So I think there's still going to be stocks, there's still going to be bonds, there's still going to be stock exchanges. There's probably going to be a lot smaller. So the financial institutions, not only are they going to be there's probably going to be more of them. Like if you look at the trend over the last 50, 60 years, it's the banking sector has grown and the number of banks has shrunk. I think what we'll see in Bitcoin is the banking sector will shrink and there will be more companies helping individuals facilitate their Bitcoin needs.
Wonderfully said.
So, I mean, just to kind of jump in too is like, I really love Parker's analogy of thinking of Bitcoin as just keys, and that's all the Bitcoin blockchain recognizes. So it's like a really good framework of like thinking about Bitcoin. And like, we don't know what the UX around handling those keys is going to look like. And, hopefully some of these upgrades do come because they'll enable like things like sharing UTXOs and like opening lightning channels within UTXOs, like within the same UTXO. Like the way that we're going to scale Bitcoin is like kind of beyond like our imagination of like even moving UTXOs around. So like there's a lot of this that we're not seeing. And that's why I really like Parker's analogy of like, think of this as keys, is like, how are keys going to scale? Like how are people going to be using keys in the future? Like it's beyond our wildest dreams. And our CEO of Bitcoin Magazine often says like the real adventure happens after hyper Bitcoinization. That's why I love this subject, is because like a lot of times we talk about like, how is Bitcoin going to take over the world? But like, how is the world getting on a good value measuring system? Like, how's that going to change society? Like, how's that going to change how everything else works? And I love this idea. And I'm really excited to like dig into like, what does that mean for society to have something like this? And maybe that can kind of tease into like finance as well.
Because it sparked when Parker said it. When you look at inflation, and I always use the analogy of the McDonald's hamburger. It's like when hamburgers and fast food first came out, it was like 20 cents to get a hamburger. And now, they're getting rid of the dollar menu because they're pumping so many dollars into the economy. But in a Bitcoin denominated world, it's the opposite. It's like it starts out at 100 Satoshis, and then 10 years later, it's 50 Satoshis for the same thing, because so many improvements happen in technology that make it cheaper for us to do it, or automation. And so it's a really interesting way to think about it. Parker, thank you for that wonderful, wonderful future. That idea is great.
Yeah, I think to add on to that, I think it asks an interesting question, which is like, if the future of finance, or in a Bitcoin world, if we have a bunch of different kind of smaller, I guess, centralized crypto banks that are enabling the future to happen, a big question I think is like, what do those actually look like? Are we going to have a situation where we're following the Bitcoin standard, and we have these crypto banks that have this, these Bitcoin in reserves, and maybe even have countries that are printing, their own currency based on this Bitcoin reserve. And the question is, are people able to remove their money easily from those crypto banks, or from those financial institutions? And if they're not, then that actually creates a big lock-in. If we end up in a world where that does happen. On the flip side, we could have a different type of world where it's more like kind of the direction the river is going in, with providing lightning services, where you have all these different companies that are providing different services that allow for people to have their own I guess self-sovereign tools for Bitcoin, whether they're running a watchtower, or whether they're providing an Oracle service that allows for someone to do a specific thing. But I think that's a big question: is what is the cost to exit whatever system people are in a Bitcoin like financial company?
So I guess I'm the last to answer here on this one. I think that Bitcoin has a little bit of a funding problem, and it's not the core development funding problem. Like, that's a separate concern. But in terms of the types of business-like activities that we want to see, Ethereum is dealing with this right now, and that's something that culturally they're getting a lot of wisdom on that we're not getting necessarily. We kind of have a little bit of a like capitalist in the streets, like socialist in the sheets kind of deal going on right now, where if you are building a protocol, like let's say like discrete log contracts, you are potentially unlocking a lot of value, but everybody wants you to release every piece of code under a free and open source license that you have. And if you don't do that, then people will get angry with you on the internet and say, you have to do it, or I will re-implement everything that you did. So let's say you made this really great discrete log contract package and software, and it's easy to manage. It's like beautiful GUI, and you're like, you have to pay $100 a year to get it, and do whatever you want. But like, that's our business model. People be, fuck you, I'm forking this, I'm making one that you don't have to pay. And that's okay. And I think it makes sense, because if you have a licensing model for your software, it's hard to integrate into other things. And then you can't like make it integrate automatically with core, because how do you do the licensing fees? So it makes sense why that evolves. And to hark back, like the question is like, what do companies look like? So a company that wants to build discrete log contracts has to give it all away. But if they're a company, they need funding, they need to be capitalistic, they need to have a revenue stream that is defensible. So I think that is where you will likely see companies that are trying to envision themselves, and maybe Unchained has a little bit of this element, but like envisioning themselves as both a technology producer, but also a market participant, and a prime market participant, who is like going to build out maybe some interior tools that make it competitive for them to operate, and other people won't have access to maybe those like models or execution engines. That's one way I could see companies evolving. I think where that's interesting to me is there are a lot of things that are really valuable that do not have a profit model. So an example of this would be fully self-sovereign custody. And I think I'm out of my drink, but whatever. Fully self-sovereign custody, there's no profit model for. Like, you've released software, and if you're saying that they have to license it, that's a privacy violation. Like, you have to have a relationship. Like, no, like that doesn't quite work. It has to be available open source so people can audit it. So there's all these issues with like actually trying to monetize fully self-sovereign custody software. It has to go out free. And how do you monetize that? That's a little bit of what I've been dealing with. I'm building tools. People are telling me like, I don't know, sell stickers. And I'm like, okay, come on. I've got to sell like millions of stickers. That's not going to happen. So I think that companies are going to probably end up focusing on things that they maybe have some strategic edge on executing on. And we're going to either see those companies having to, open source these tools, like for self, here's a question. Is Cash App and Square Crypto going to release really good self-sovereign custody tools? Maybe Square Crypto will, but if Square Crypto is doing that for like years, it's going to get dropped because it competes with Cash App's main line of business, which is, hey, like we've got to like have a platform where we're the prime thing. Maybe it'll be integrated deeply. Maybe you'll see Mozilla models evolve where Cash App for Bitcoin is like purely self-sovereign, self-custodied, but they have like the inflow. Like if you want to hit the buy Bitcoin with credit card button, it's going through their servers. That might be one way that things move forward. But I think it's going to be a real struggle that we'll see people having to get pretty creative given the constraints of the space. People are very intolerant for profit models. Any way that you are extracting a profit, that's a middleman, and it should be eliminated by the virtues and like principles that Bitcoin wants to live on. But if we want to see things actually get built, we need to have a way of incentivizing people to do that. So I think that's going to be the real interesting thing to watch going forward. And I think that applies for everyone in this room. Like, atomic loans, like how do you, build a moat around that? If somebody else can come and be the loan provider, you can't, and you've got to open source everything. So maybe it's your risk models, but it's very hard to do that as a startup when you're a technology provider and not like a Wall Street wizard, and Unchained, you have issues, maybe going forward with multi-sigs. Like, okay, if there are better things for multi-sigs than the standard multi-sigs, like, and your users are going to want that, but there's no moat that you might have on monetizing that. Like, what does that mean for the future of your products? And Tantra, I'm a little bit less familiar with, but if, it's like a yield and like interest product, like, well, that's a trust relationship. And what happens when there's a trust minimized platform for that, where, you're putting money in, but you have a CTV tree that lets you automatically get it out as soon as you stop trusting the provider, and, whatever, maybe some future thing is really great for that. Well, it ends up being, more difficult and that's great. The margins go down, but we still need to climb the mountain first. We need to build all the software. And I worry that the funding for this just isn't going to come into the space unless there is a way that we as a community agree that we're okay with companies making money.
Yeah, and I think, I was going to just like think about, because I think a lot of things that you brought up, Jeremy, are things that we think about specifically at Unchained. And, one of the things that we've done, like we recognize in the context of multi-sig, we're like, this is going to be free. Multi-sig just by itself as an application will be free. And what we did was in our view, we know that, or that's a belief that we have. And so we open source a multi-sig application called Caravan, partly because we need it for our private application. We need a path for either we have Caravan, or, there's a really difficult way that most non-technical users like wouldn't be able to go take their 2 keys and figure out how to work Electrum. So we need a path that like protects them against us, so that if our private application, if anything happened, that they would have a way to access their Bitcoin. So in many ways, that the open source application is just a service for our private application. But in other ways, it provides people a solution that if they don't want to work with a third party, they can use it. But in doing that, we essentially create our own competitor, which we say, look, if you're going to pay us for things, we have to be providing you incremental value above just what this open source application can do. And one of those things that we've recognized is that, one, our key, for a wide swath of Bitcoiners, our key in a multi-sig quorum is valuable to people, in the sense of, if you think about a 2 of 3 and somebody having 2 keys and 2 backups, they have to have 4 secure locations. Well, if they had 3 keys and 3 backups, they need to have 6. So us professionally securing 1 key gives a lot of people that wouldn't otherwise self-custody or use multi-sig the confidence that I have to lose 4 things in order to lose my Bitcoin. I feel good about that because Unchained, I know, is securing 1. But then in addition to that, when you think about the context of businesses, okay, you're using Caravan, you're a business, and you've got, and this is what someone like Tantra went through. They say, well, we could use Caravan, but then we've got to figure out how to pass transactions back and forth with each other. We're an organization of people that need to coordinate. Bitcoin only knows keys. What is the glue layer? What is the thing that knits it together? Again, Tantra has control of their private keys, but then they use our application layer to help coordinate not just between them and us, but between themselves. And so those are like finding the ways that we can add value on top of just the base layer. And then through our open source application, we make that distinction very clear. It's like, if you don't get the benefit of the other things that we're offering you over here this thing is, but it's because of the existence of that they can start to understand the value add that through our application.
Yeah.
Right.
Yeah, I think the thing, just real quick, the thing that I think is just sad for Unchained in this example. I mean, Unchained is great, but like the thing that's sad is that ultimately that impacts the price that you can charge for your services, which impacts the amount of money that you can reinvest into making your services better, right? Because there's an open source competitor that is available for people to use. Therefore, like, you know, the amount of value you're providing over what's available is lower. And I think that it's just like, I would like to have a community that still gives you not only the same amount of money, but even more money for doing things like that. Because that should be incentivized, right? The behavior that you have, A+, like, I want to find ways that more people act like that, right?
Yeah.
I think to add on to that, because Jeremy, you had a lot of great points, and Parker, I think not only the way that your company solved the problem, but the way you answered that question was amazing. Really, what I think technology has pushed towards in the last decade is the freemium model. And that is Caravan and Unchained, where they give you this like taste of freemium, and then here's our premium package where it's white glove. We do these things for you. We help you through the process. And like for Tantra, we won't ever have that. Like we have it today because of certain laws and regulations in the United States. But as soon as these things open up and there's smart contracts on Bitcoin, what you said, Jeremy, is absolutely true. Like our company will become a smart contract. And there is no reason for a centralized organization like this to exist outside of holding some more proprietary information back. Now, whether or not you could deploy, fleets of algorithms or execute these things in a decentralized and open source way is a whole nother story. But ultimately, the value, or at least the way that I see it, like I love the terminology capitalist in the streets, socialist in the sheets, because it is true. But as software developers, a lot of what we do is like when we face a problem, sometimes you're able to create tooling for that problem that you can then share with the world that solves your problem. And then you get to hold this proprietary information back. So like, I think Unchained is a good example. For Tantra, our example might be like, I could share with the world a suite of algorithmic development technologies, but then the algorithms that I run on it are proprietary. And so you can verify the code that executes trades or does certain things, but the way in which I might execute that trade, the contract I might hit, what time I hit it at, how much I hit it with, that's proprietary information. And I think that as these ecosystems evolve, there are tremendous amounts of products that follow that kind of premium model where you verify the logic execution engine, so to speak. And then the actual executor is someone that you trust, or maybe you pay a premium to interact with. Does that make sense?
Yeah, and I think that actually brings up an interesting issue that like I concretely deal with, which is SaaSification. So I'm working on like a programming language for Bitcoin contracts, and it can make really awesome self-custody solutions. Like you can make all sorts of types of vaults and like recursive vaults, and they're non-interactive setup. So you can have keys that are cold and you set up the vault and have automated programs to withdraw from them without ever having to touch those keys. So those keys can be like, you buried them under concrete and it's not too inconvenient. So like really, really cool stuff. But what can happen is I release it and then I have some advantage on developing these things internally, but anyone else can develop those things and develop their own private IP cache. And then they can offer it as a SaaS product.
Mm-hmm.
And if they offer it as a SaaS product, it undoes the main thing that I've been trying to do, which is make self-sovereign software, make it so that it keeps everybody not using a trusted third party for this, or getting, being able to do it without needing anyone else. And so I think that that's like where I mean, there may be licenses that help with this, but then those licenses also end up interfering with people using it. So it just ends up being a really like difficult, commons problem. It's like that you're producing this public good and it's non-rival use, but it is rival in that if you don't, if you're profiting from it, you are taking from the ways in which this software could be monetized, but then you're not contributing back to the public sphere. And I think we do have companies, no one on this call, but we do have companies that I think will look for selfish advantages that do not care about the underlying principles that have brought everyone in this room, here today. So that's why I worry about this stuff.
Yeah, no, it's a great point, and I understand why you worry about it, because ultimately, like exactly what you said, I feel that the technology and like even what you're speaking about, there's absolutely somebody that's going to come pick that up, make a pretty picture over it, make an LLC and charge money for it. And I don't know that you're ever going to get away from that, but I'll tell you right now, and it's the reason why Coinbase is so successful. People don't want to think. They want to go trust someone else to do all the work for them. And that is the world that we live in today.
So if I could just jump in, and my gin drink's really strong, so I apologize for this, but I'm about to try and get a little metaphysical in this. But it sounds to me kind of, especially Russell, what you were talking about, Jeremy, what you were talking about, is that in some sense, by building a financial company on Bitcoin, you are inherently creating something that will ultimately die. And it's like, if your goal is eventually to create this, innovation and innovate and iterate on it until eventually it becomes so decentralized and so ingrained in how people use this product that there's no need for your central sort of entity in the project, and it kind of just becomes Bitcoin. And so I don't know if that's a really dumb way to look at it or a really interesting way to look at it, but it's like almost inherently in creating this initiative, you understand that you're going to create some value, and then eventually it'll be there for everyone, and you have to go, do something else. And so I don't know.
The corporation that we built, it's the sats we stacked along the way.
Yeah.
exactly.
Yeah. I think that's.
I think one of the things. I think one of my headsets is screwed up, but like one of the things I think about is most companies, they start out as zero value and they end at zero value. That there's a life cycle, right? Like, and that company can, for the people that work there, the shareholders, everybody can deliver them a lot of value in the interim. So it's like, it's not necessarily a bad thing. Companies rise and then they almost all recognize that markets change and that they need to effectively obsolete themselves or die. And so an analogy that I'll often use is telecom companies. Like telecom companies used to make their money on landline telephones. Like they still exist, but they're practically non-existent. And so they realize, okay, well, cell phones are the thing. And then, we're going to charge for voice, cellular. Oh, that's becoming less and less used. So we have data now. Now we're going to have streaming data, so it's just that like now the good companies figure out how to constantly evolve, because I would say that there are always going to be people that need things. Very few companies over the test of time will last for centuries. But the good ones that even last for decades figure out ways to reinvent themselves, because they generally figure out, okay, we've solved one problem, and once we solve it so well, we can do it without practically any human energy. And as we do that, the cost of that trends to zero. So in order to continue to be valuable to people, we need to reinvent ourselves. So I think that's not specific to financial companies that are helping in Bitcoin. I think that's something that's endemic to any company that's doing anything for anybody. So I think it is like, the better that you get at what you do, you're going to drive that cost down, and you're going to free up your resources to do something else. And if you're good, then you figure out how to reinvent yourself.
Great point. I want to throw in there too, Blockbuster being a perfect example of a company that started at zero and ended at zero because they didn't adapt.
Yeah, and they created a lot of value in the interim, and that's okay.
Totally.
CK, you're muted.
Sorry, we're getting at 2 hours here. Do we want to keep riffing on this, or should we wrap it up?
I got to get going here pretty soon myself. So.
All right, I think it's time. It's time for our last word. Matt, we haven't heard from you. Let's give you the first last word, sir.
Yeah, the last words on what? Like Bitcoin native finance, or just in general?
Yeah, just this is your 15 seconds of fame here. So whatever you want to talk about.
Yeah, I mean, I think I'm kind of from this conversation. I think it's interesting because in the interim, like companies that require, I guess to Jeremy's point, like with companies that are creating open and free software that kind of makes themselves obsolete. I think that the companies that actually are building tools that require a little bit of centralization, like you take a DLC, for example, or you take a state chain, they're actually going to have an advantage, in the short term in doing whatever they want. But in the long term, I think Parker and Russell, you guys are right that all companies eventually die, and everything that we build here today will eventually make Bitcoin better in some sense. And I think as long as we can push the needle forward in ensuring that future is something that is that has as many properties as Bitcoin as possible, and not reduce the number of properties in the financial tools that we create, then we're moving towards a better future.
Awesome. Let's go to you, Russell. What's your last word, my friend? Thank you for coming on, by the way. I appreciate your perspective.
Yeah, thank you. It was really fun to hear everybody, and I feel enlightened having talked about all this. I'm excited for the future of Bitcoin. I'm excited for the future of decentralized finance. I think we are in a movement that is putting the power of money back in the hands of the people. We can verify our money. We can program our money. We can do what we want with our money. And that is I can't even put it into words how big of a deal it is, I think, for our generation to be able to do that, and feel blessed to be here with you guys and be a part of this movement. I'll shamelessly plug Tantra. Everything that we're doing at Tantra is around helping people be safe and feel safe being Bitcoin denominated, because we believe in a future that is Bitcoin denominated. So I'm really happy to hear you guys and be on this podcast, because I think everyone's opinion is really important. Parker had a lot of really good points, and so did Jeremy. And these points, and talking about them openly like this and being a part of a bigger community, is, I think, what's going to help Bitcoin stand the test of time and become the next world reserve currency that I think we all believe it will be and hope it will be. And thank you for having me today.
Awesome. Let's go to Parker and then close out with Jeremy.
Yeah, I'm just glad to be here. Yeah, I certainly appreciate, I know Russell pretty well, but it's good to be able to hop on here and have a conversation. Jeremy and I have never met, but it's good to mix it up. And I think that having these conversations where people come at things from different perspectives are generally, productive, and especially in these settings. So I think talking about these things and hearing about kind of not only issues that certain people kind of see, but then also kind of their vision for kind of the future is helpful for me as I think about kind of, what we're building in Unchained, and how I think about Bitcoin and how I think about building. So just happy to be here.
All right, so I guess I get the last word of last words. This was a lot of fun. I think this is my third time here.
Yeah, man. You and Parker are both veterans.
Nice. It's always a good time. And I guess what I want to close people out with is that, this whole money thing is still like this big social experiment, that people are doing around, just overall time. And we think it kind of works, and we're trying out different things. We're trying to figure out what properties are really critical for evolving society, pushing things forward. Bitcoin, probably has some really important properties that I think our society is in deep need of. it's sort of like somebody should make like got milk commercials, but for like Bitcoin. If any like marketing gurus out there, like let's make those. But what I think is important is that we stay humble and have some humility around like what Bitcoin is today compared to where we want it to go and what we aspire for it to do. Because I think that it can be sort of a, if we promise that Bitcoin does X and it kind of clearly like does not serve an X role, it's kind of a joke. And what I want to do is I want to be in a community where we know what we're trying to get Bitcoin to do, and everybody is aligned on doing whatever it takes to get it there. And I think that, maybe it is, memeing it into existence. And that's been a wave of Bitcoin adoption over the last, decade. But I think that there are a lot of other ways that I want to see people get involved and participate that I'm, excited by a lot of the initiatives I've seen in the space. And I'm hoping to see that trend continue over the next year. And anyone who's listening here, just, find a new way of getting involved. Like if you're already really super involved, like, maybe ignore that. But if you're like, oh, I think this Bitcoin thing, I like watching podcasts, I, have some, figure out something new you can do. Try somebody's software. If you like it, send them a few bucks. Like subscribe for their service or something if they're offering it, because we have to get like, we have to kind of build out that community. And I think that's the way.
Awesome. Yeah. And I mean, I completely agree. Again, like, I feel like there's just so much more to continue to build, and we're not there yet. It's easy to kind of like think about how Bitcoin's inevitable, but the inevitability takes a lot of work and a lot of building. And I always appreciate you, Jeremy, in particular, for like just trying to push the envelope in general. Like we need all those voices. So appreciate you kind of putting your neck out there. You guys, this was a really fun show. This is one of my favorites in a while. Just like very high quality conversation, very nuanced, getting into the weeds. And, I pride myself of having a show that kind of, doesn't have a subject that gets censored or anything like that. So appreciate you guys going on this journey. For all the viewers out there, thank you for tuning in. Make sure to subscribe to Bitcoin Magazine YouTube. Trying to put out regular, fantastic Bitcoin content. And yeah, have a great night and stay safe out there. Peace.
All right. See you guys.
Thanks. You're a rock star, CK. That was awesome.
Yeah, thanks, man.
Thanks for putting this together.
Good to meet you guys. Have a good night.